Good day to you, ladies and gentlemen, anywhere you're listening. I'm Yemi Olaleye. I'm a global financial market analyst, and this is the outlook for the market from the fundamental perspective and the technical perspective for 10th of March to 14th of March 2025. First, we're going to start up with the fundamental outlook in the market from the forexfactory.com, and we're going to see what opportunities we have for this week in the market. Going straight to the point, on Monday, March 10th, 2025, we have no single impact news in the market, and we're looking forward to none. So basically, on Tuesday, we have US dollar coming up with the JOLTS job openings by 3 p.m. Nigerian time. We have Wednesday coming up by 1:30 p.m. Nigerian time for the US dollar CPI. And we also have 2:45 p.m. for Canadian dollar, which is the BOC rate statement. And then on by 3:30 p.m. as well, we have the Canadian dollar coming up with the press conference. On Thursday, we have three solid impact news from the US dollar by 1:30 p.m. Nigerian time, which is the core PPI. Don't forget, on Wednesday, we have the CPI, and on Thursday, we have the PPI. On Friday, we have Great Britain pounds US dollar, and that's it. Great Britain pounds and US dollar. They're coming up on high impact news for the GDP and the prelim UOM consumer sentiment consecutively. And that is the highlight for the weekly fundamental outlook from forexfactory.com. And let's check that impact on how it's going to react in the market based on the technical outlook. Starting with the DXY, which would give us more guide and direction on how to navigate the US dollar pairs in the market for this week. Last week, the analysis we had was really good for some, and some actually hit the break even. I believe some would have hit some stop loss for some people. But regardless, as I said, we have to blend with the market. We have to understand where we're waiting for the market to come to before we anticipate, before we jump on a particular trade. So let's see what we have for last week. And this is the monthly time frame on DXY. This month has been bearish so far. And of course, still expecting more bearish momentum in the market for this DXY for this month. Let's go to the weekly outlook. On the weekly, what do we have there? We have a massive bearish momentum for last week candlestick on the weekly time frame, and this has actually claimed the previous low level that we anticipated in course of the week. And as you can see, the market right now is closer to another low level, which we're expecting the market to react with before we have more continuation of a sell. But ideally, this remains a solid sell momentum, as we can have something like this in the market, and we can have something like this in the market. So basically, we're still expecting a little bit of buy before we have that sell opportunity on DXY, because right here is another level we're looking at where we can have more demand zone, where we can have more liquidity for the market to push away. Okay, so that being said, we can also have another level right here, which is the first point of interest within this price level to this price level, which is the fair value gap within that price before this high was taken out completely in the market. This looks like the textbook outlook, but then basically that is what the market is all about. So we're only waiting for most of this to play out, and then we can box in some bucks in the market. Then let's go to the daily time frame. Let's see what we have on the daily. So sorry, I'm going to take out all of these guys. So on the daily time frame, we have a simple outlook here. The last week trade was very bearish for DXY. Monday, Tuesday, Wednesday, Thursday, Friday was very, very bearish. And the most volatile day for that week was the Wednesday. And all of this time when the market was creating this bearish momentum to the downside, it's been creating a fair value gap and imbalance across all of those price ranges. And we can have like two right there. So what do we do now? We only see the markets in this range, and it's showing us that more or less we are going to experience a bit of retracement in the market. So if we're going to expect a retracement in the market, at what price level are we expecting? From this price level to this price level is one of it. Then we can expect a bit of retracement to the upside before a more continuation to the sell direction. As you can see that. So this level, I'm still expecting the market to take it out, of course, right here. But then before that time, I would be expecting the market to do a bit of this retracement, to do it to a reasonable level, and then we can have more sell opportunity from there. So ideally, I'm waiting for the market to do something like this, to do something like this, do something like this. Basically, this is what I'll be expecting to see in the market in these coming days. But however, that is why it is good to wait for Monday to come to create a daily candlestick. Then we can use that information to trade for the rest of the week. But however, this is what I'm anticipating on the XY daily time frame. Now let's take this out and let's go to the 4-hour time frame. Let's see what we have in there. On 4-hour time frame, this looks so bearish, and of course we're going to see more opportunity to look at it from another perspective of retracement before continuation of this sell. So ideally, if we're going through with it, Fibonacci tool from this price level to this price level, those would have been around our 50%, whereby that is also a level we can look out for. But however, this is something looking a little bit different. I'll be expecting market to come to a price level like this, or I'll expect the market to come to a price level like this, which means from these two price levels, this is my first point of interest and this is my second point of interest. I'll be expecting to sell from there. This is on DXY, by the way. This is right here. Okay, this is right here. This is on DXY 4-hour time frame. So basically, I'm expecting a retracement of this bearish momentum. This is so massive, guys, and I'm expecting this retracement to happen before I'll continue to sell from there. So I'm expecting shorts from these ranges, from this one and from this one. So the first one will be at 104.304 and the second would be 104.90, and these are the places I'm looking for retracement to on the DXY. Now going to the Euro US dollar, it's been a massive one, so let's check that from the monthly outlook. Let's see what the market is saying. This month has been so bullish in the market, and we experienced that bullish momentum. This month so far has done about 470 or 480 pips in the market, and with that outlook, therefore, it means there's still more bullish momentum in the market. As you can see, we had a high price level here, we had a low price level here. Market swept through this level and now is building momentum, believing that it's coming to the up price range right here. So we need to see how the market is going to clear a buy-side liquidity before we move to the other side of the external range liquidity. And of course, currently we have the market being clocked here. Market clocked out from this price level at 1.08313 on Euro US dollar for last week. And then let's see what we have on the weekly time frame. Let's see the outlook there. On the weekly time frame, the last week was still massive, and we have about 496 pips on average, of 500 pips movement for last week, and that was massive. That was more than what the market has done in the past 3 months, so to say. And let's look at this from another perspective. What if the market is actually still heading to this price level, and that is about how many pips away? That's about 447 pips away. That's about 450 pips on average. So what really are we expecting from this market? More bullish momentum for this week. But then, is the market just going to jump into the upper price level like that? No, I do not believe so. So I believe the market is actually going to retrace to price level, then continue to do its thing and get to that price level. Then from there, we can be anticipating sell in the future. But then this is what I'm saying on this price level. And why am I choosing this price range here? Because at least we can see something here in the market. We can see how the market has reacted to this price level. And of course, when we see something like this in the market, it tells us that the market will not move in a particular direction for a long time or forever. So with that outlook, therefore, we can be expecting the market to do something like this. And the creation of this week candlestick will also create a level we should be anticipating for next week momentum. So currently, for now, we are waiting for what will happen with this massive bullish momentum. Why? Anytime there is a massive momentum in the market, we always expect something significant as retracement. So because of that, we are so careful on where we join the market and how we join the market for continuation or for retracement. On the daily time frame for Euro US dollar, let's see what we have there. On the sequence, look at this. From this perspective, we saw that this on daily time frame had a beautiful bullish and bullish momentum all through, and creating fair value gap all through last week, and that is quite exciting. Which means if we want to look at that from that perspective, this is one here, and if we want to go again with that energy, this is another one right here. So which means we have multiple options where we can expect the market to come to. But then the real question is, where are we really expecting the level with the highest probability for profit? And that is what we are after. So with that, now the best thing is to follow the trend in the market, to follow what the market is saying and what the market is showing. So basically, I was still expecting this level to be taken out in the market right here. Expecting this level to be taken out. This is on daily time frame. And this will also be this week, by the way. So this is about how many pips to the current market price. Let me see that. I'm coming. So we're going to check how many pips that is away from the market. This is about 110 pips. So I'm believing this also will be possible. But before then, I'll be expecting the market to do a little bit of retracement. This could be more than 150 pips into this range before we have more bearish, more bullish momentum. So looking at this from that perspective, therefore, you will see that this looks like the cycle is not completed yet. The lower lows has been cleared. Now market has started creating higher highs and higher lows, higher highs. And last week was an explosive one, just to ensure that we can see from a new perspective that this level now, the buy side liquidity right here is now the new target. But before then, this level will be taken out. So before we have all of this playing out, we have to see the market doing a little bit of retracement, and then we can have more explosive movement to the top price level. So this is the outlook on the daily, and of course we have to check out what we have on the 4-hour time frame. 4-hour time frame for this is looking just like this. Just looking at this, I'm shrinking the chart and looking at this from the perspective, when you see something like this, it looks more like a textbook setup whereby you're expecting this cycle to complete, right? If that is what you see, yeah, that is what I'm also saying. So this level is expected to be filled in the market. But before then, we're going to expect more sell momentum into this price range. Then we have that buy. So ideally, if you're going to be doing that, I will be looking at 1.0690, or my second point of interest, which is kind of long. I don't really expect the market to come in there, but within this price range, it's okay for me. Or to this price level, 1.0625, I'll be expecting the market to retrace in there before I catch in for a new buy momentum. But ideally, for this week, we're going to see more bearish momentum as retracement for us to have more bullish explosive momentum. Okay, for continuation. And that is on EURUSD. So let's go straight to the GBPUSD US dollar. We analyzed this last week as well, starting from the monthly time frame. What do we have in there? So we're expecting more bullish momentum from what we had last week, if you can remember. Look at this, expecting the market to do something like this because this is more of a bullish momentum for this month, and then we're expecting more to happen. Let's go to the weekly time frame. Let's see what we have there. On the weekly time frame for last week, we're expecting the market to, I'm coming, I think I need to take this out, okay, with time. So last week, we were expecting the market to do a bit of buy momentum and continue the buy to this price level. I remember that we're waiting for this and we're like, this is more than 500 pips on average. Yes, it remains the same. But basically, last week was a fantastic bullish momentum and bullish opportunity for the market where we had about 350 pips on average on GBP US dollar. Now for this week, so let me take out everything we've done before now and let's recite with what the market is showing. Okay, so for this week, therefore, the market has created a bullish explosive momentum right there. What are we expecting for this week, therefore? So we can wait for this market. On this week, we can wait for GBP US dollar to retrace into this price level before we have more bullish momentum, something like this. So basically, we can wait for a bit of retracement. It could be as much as 130 pips, 150 pips, but we can wait for this retracement to happen on GBP US dollar before we buy again. And we're expecting to buy as long as to this price level, which is 0.3427. And let's check out what we have on the daily time frame. Let's see our analysis in there. Let's see what we tend to benefit from this outlook, therefore. And then one of that thing is, as a scalper, you may not be able to have so much opportunity in this realm because this deals more with higher time frame perspective. Okay, so at best, it's more of intraday traders, the daily traders, and the swing traders. So that's why we move from the monthly to the 4-hour time frame. Okay. All right, this also looks like a textbook setup where we see the entire circle looks like this, excuse me. And of course, we look at the markets now creating higher highs and higher lows, creating different market shifts and break of structures in the market. And of course, explosive movement to break this previous high level. We can expect the market to just retrace back into this range. One of the other reasons we can be expecting that to happen is because we also have daily imbalance right there. This is the level for daily imbalance, but this was the only one we had when this level was broken. The previous high level was broken. This was the only one we had here. Let's see, right here to this price range. So anything aside, if we're not expecting anything from this market, at least we have an opportunity to see where the market has actually created a daily imbalance above when it moved away from the previous high structure that was broken right here. So with that outlook, therefore, this leaves us with one conclusion that we're expecting a bearish momentum. We're expecting the market to do more sell before we see more buy in this currency pair. So which means ideally we're still expecting the market to come back to this price level. We want the price to still come back. Want to see the price come back to this level, which is at 1.3434. Basically, we flow with the market energy and what the market is showing. But ideally, what we can see so far from here is the market is creating shifts in the market. It's creating higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. And currently, the market has actually broken the previous high level we had it. And this level is also significant zone right there. Now, the market has taken out that level. And what do we expect? We expect the market to fill in for every other thing that you've seen here. So what you have here is what we're expecting the market to fill in for this week right here. So basically, this is what we're expecting in the market, expecting that to be a bearish momentum for retracement, then continuation of that bullish energy on the daily time frame, Great Britain pounds, US dollar. And let's check what we have on the 4-hour time frame. The energy is remaining the same on the 4-hour time frame. I'm coming. On the 4-hour time frame, I'm trying to remove some of these guys. So on 4-hour time frame, we're going to have that sell before the buy. And basically, that is what we're looking at in the market. If the XY will be buying before more sell continuation, that is the same thing for Great Britain pounds, US dollar to sell before more bullish continuation. I hope you get that. So basically, we're looking at the market from this perspective for this week. We have an explosive movement into the bullish direction for last week. Then we should be expecting a bit of retracement back into this range for this week before we add the continuation of this market flow for the days to come. Can you see that? So this looks more like this is a textbook setup where we're expecting the full circle to be completed at this range. This is also more or less like what we've seen on Euro US dollar. Now let's quickly go to the AUDUSD and see what the market is actually showing in there. Most importantly, let's find opportunity we have for this week on AUD US dollar as well. Last week analysis on AUD US dollar went as we talked about it, and we said after the sweep of this liquidity at this lower price level right here, what we can be expecting from AUD is a buy momentum. So basically for this month so far, AUD has bought about 200 pips, about 150 pips, currently retraced to about 84 pips of bullish momentum and energy. But then let's look at the weekly time frame analysis. Let's see what we have in there. We have the bullish momentum for last week. It's also cut across to AUD US dollar, but not as massive as the rest of those guys, because this gives about 100 pips on average, where Euro US dollar gave about 500 and Great Britain pounds US dollar gave about 350. AUD gave about 100. So which means this energy is a little bit different, and the momentum was not as high as much as we saw on those other two currency pairs. Now, this is the outlook on the AUD dollar for this week, expecting the market to do more bullish momentum into this range, whereby the market will do about 100 pips to hit this price level and even do more. So basically, this is on the weekly time frame, and we can look at this perspective that the market has created sharp movement to the downsides over the times, and we can see how the market is now retracing and taking back all of those liquidity zones that is actually there. We actually saw how the market created a lower price range level like this, where the lower price was taken out, which is the grab of liquidity from that zone. We saw how the market actually created a high that was taken out completely. We saw how the market actually retraced and came back into a price range, which is the demand zone right here. And from there, it picked up a bullish momentum energy after the last week bearish momentum, the previous week bearish momentum, followed by the last week bullish momentum, expecting the market to do what? To continue in this energy for bullish momentum. That is on AUD US dollar. And let's check out what we have on the daily time frame for this currency pair, and let's see how that affects us, impact us as traders. So let's go now. We're going to the daily time frame, and this is on the daily time frame. This is the daily chart. Let's look at the market from this perspective. All right. So looking at this, as I said, a bearish momentum, sharp one right here, and the market created. Let me just take out everything. Let me take out everything. I'm trying to take out everything here. Coming. Okay. So looking at this market now, it's back to reset. Everything we've seen here, we're expecting that to actually still move back in the same range, expecting the market to do more bullish momentum till it fill up that zone, which means this level is where we're expecting the market to get to. So on the higher price level, we're expecting more bullish momentum on AUD US dollar. So are we expecting more sell too on this particular one, just like we're expecting a beautiful sell on Great Britain pounds US dollar and the rest of those guys? No. not necessarily, because this guy actually did a little bit of reversal on Thursday, and Friday was bearish for it. And peradventure, if we're going to experience anything new on AUD US dollar, is to see the markets moving in a bullish momentum for this week. So this is what I'll be looking out for on AUD US dollar on 4-hour time frame. Let's see what we have in there. After we had the bullish explosive movement to this price level, grab of liquidity happened right here. As you can see, right here, this candle, it swept that liquidity close below it and formed a shooting star candle. And with that outlook, therefore, we had the opportunity for sell momentum. But then this is all we had for that day. And now, currently, what are we expecting? We're expecting more bullish momentum, more bullish momentum, more bullish momentum in price. So this is what our anticipation looks like on AUD US dollar for this week. So basically, this level is our new target, and that is about 100 pips on average to the current market price. Does that mean the market may not do more than that? Of course, it might do more than that. It can even do more than that by far. And this is just the outlook of 4-hour time frame on AUD US dollar. And let's remain hopeful, let's remain careful, and let's remain cautious of all we do in the market for this week, because we have some news coming up for this week as well, which are high impact news from the CPI, from the PMI, from the GDP on some currency pairs as well. So let's just look out for these opportunities in the market, and we trade with proper risk management. Okay, so don't forget what we had here. And let's go to the other time frame. Let's go to other currency pair rather. We're done with this AUD US dollar. We're done with it. This is the outlook we had on AUD USD. So at the end of the day, we should be expecting as much as 640 pips or 600 pips from there, as much as that in the future. But then let's keep up with this energy first, and let's see what we can make from this outlook for now. And let's go to the other parts, which we have. We talked about USDJPY at that time. Okay, we can continue with that. Let's see what USDJPY is doing. Let's start from the monthly time frame. Let's see that outlook. Let's see what it's doing. Basically, it's on a sell momentum for this month, as we can see. So of course, we've seen how it reacted last week. We expected the market to move the opposite direction last week, but it didn't go to where we expected before we take a bullish momentum. So which rendered this a valid sell momentum for last week. Okay, now let's look at the market from this perspective on the monthly time frame. This is showing a bearish momentum right here, and we expect this to even still go a little bit further, because we have ranges right here where the market still look at. It's looking like it's going to clear, which is more than 800 pips in the future. But before then, what do we have for this on this weekly time frame? On the weekly analysis, let's look at what we have on USDJPY right here. We saw how the market has actually created an explosive movement to another flow, where we can understand that there is a level here where liquidity was residing. The market moved into that range, retraced immediately, and pumped away. So last week we saw bearish momentum on USDJPY, which created a lower low price level right here. Can you see that? So the lower price level we saw was taken out completely in the market for that week. And of course, we had another level here. Let's see. This also was taken out in the market, and market closed below it. So with this outlook, therefore, what exactly are we looking out to do? This will definitely still look bearish to us, because we still have ranges right here that the market still needs to visit before we have more bullish momentum. But of course, looking at this from this perspective, we're going to see clearer how we add this liquidity trend above these price ranges, and how we have this below these price ranges. And the next thing for the market is to visit and grab liquidity before it moved away. This is the usual thing in the market. But on the daily time frame, it provides us more insight into what we should be expecting for this week. And that is simple. Looking at this market from this perspective, we had a fair value gap level or zone right here. We have a little range here and a little range here. This is on daily time frame. So when we go with that energy, therefore, we're going to see that we need opportunity for the market to buy to a price level like this before we can jump on a trend. We need to do something like this, expect something like this to happen in the market. So which means I'll be expecting more bullish momentum to come into this range, which is not really much, about 30 pips thereabout. when this market, in fact, market might gap into this range. If the market gaps into this range, most likely we're expecting sell to start from that Monday. But basically, on the daily time frame, therefore, we're expecting the market to do this. We're expecting a little bit of this retracement, which is not much, and then we expect more bearish momentum in this market. And of course, looking at the price level we had an opportunity to see clearly that liquidity is expected to be trapped within a price range where we have this in the market. So looking at this price zone, this is also a fair value gap at a point in time, and we can expect the market to still come into a price range like this before we had more opportunities into the longing of this market, this pair, and that is over 300 pips, by the way. Okay, checking out on the 4-hour time frame, and let's see what we have on USDJPY. Let's see the opportunity there. So the last trading days of USDJPY for last week actually created a bullish energy right there. It was a bit choppy, of course, but it created a bullish energy right there. And when you look at it, it was more or less like a ranging zone within those price levels. And then we can expect this market to do something like this, to come to a price level like this, of course. Can you see that? To come to a price level like this, when we had this opportunity in the past, to do something like this and then to move down straight. This is the outlook on 4-hour time frame for USDJPY. And let's see how the market will play out. We're going to follow the market outlook. We're going to flow with the energy. The fundamental can change direction at any point in time. We're going to just adapt with anything the market is coming out with. So basically, this is just how we expect the market to move for this week. This is all I have on USDJPY. Then to the last guy, which is the gold. And let's see what we have on the monthly of gold. One important thing about gold is on its own new level, doing what only gold can do. And drawing now is more or less like we are dealing with market that is actually in a no man's land, because when market is creating all-time high, where do you want to use as a reference point? So basically, we just want to analyze based on what we can see clearly in the market. This remains bullish momentum energy for this month, as we claimed in the last outlook. And last week, we also expected the market to be a bit bearish based on certain reasons. And we saw the market move the opposite direction, because the criteria for us to actually see that bearish momentum was not seen in the market for that last week. So basically, let's check it out now. On the weekly time frame for last week, we had a bearish momentum, and the bearish momentum was against the flow that we expected for last week outlook, because expecting last week to be something like this, that the market will come here, yada yada yada, and before it starts buying. But the market never came here. So this old buying was not in place because it didn't get to where we are expecting. So basically, gold is just doing things that only gold understand. And basically, we just trade this with a better risk management for us to be profitable if we are trading on gold. So basically, this is what gold is looking like on weekly time frame. But let's see the opportunity we had on the daily. Let's see how we can deal with this and how we can make some money from gold for this week. It actually is too choppy. Look at this right here. For the past 3 days or 4 days, it has actually been within this range. And being within this range, back and forth, is to leave traders trapped. You get trapped with a whipsaw effect, and at the end of the day, you're frustrated out of the trade. But essentially, this looks more like the market has created higher price level here. As you can see, the market has created higher price level here, right? And with that outlook, therefore, the next candle we saw was a bearish momentum with this energy taken out of the previous low levels, which is fine. Then with a doji, which tells us that the market is actually not really ready for any momentum. It's a tussle between the buyers and the sellers. Then the next candle we saw on the daily was a bearish momentum, of course, and it took out the previous low price levels right here. Now, this is also a formation for a setup. The market now retraced all through last week, moved back into this price range here. And what we expect now is to see markets moving in a particular direction for a sell, but it's actually still ranging. And that is where we are confused with what the market, where I am confused with what the market is actually tend to do. But essentially, this looks bearish for me. It looks bearish. This looks bearish for me in the market, because I'll be expecting this level to be taken out in the market before I see more bullish momentum that's going to break the previous high level. So basically, I'll be expecting this level to be taken out in the market right here. Okay, basically, this is what I'll be expecting. This is not looking too good with this choppy energy on daily time frame. But let's go to the lower time frame. Let's go to the 4-hour time frame on gold. Let's see the outlook. Let's see what we're talking about. Can you see this is so massive of a bullish momentum? Just a little bit of retracement right here, break the previous low level, went back into that demand, supply zone, and then it started ranging. So this old choppy environment here is where I'm expecting gold to take out completely, where that will be happening. Can you see something like this? So I'm expecting this to happen in the market, and when that happens, look at this. So I'm expecting something like this to happen in the market. And where that happened, expecting a retracement to that zone. And from there, we had more sell to take out this level, grab liquidity, and come back to the all-time high. This is my anticipation on gold, actually. This is my anticipation on gold. But then let's wait for the market to create money candle, and let's see what we can do with that information for this week. And let's go to the 2-hour time frame. Let's go to 1 hour, by the way. Let's go to 1 hour, by the way. I do this only for gold because of the risk that is involving.